Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. All right, welcome to another exciting video of options trading for beginners. And today we'll be focusing on 0DTE SPX spreads. So earlier today, sorry, I wasn't ready to record, but I placed the 40/40/40/45 bull put spread. I made a quick $130 on that, and then I placed a 4100/4105 bear call spread, and I'm up roughly $50, give or take, on that. So, also on SPX, my PL year to date is 31.95, and I've only been trading it for not even a week. So I may be changing the direction of the channel. Instead of focusing on random underliers, becoming a master of trading SPX 0, 1, and 2 DTE. So we're going to experiment in real time how profitable SPX 0 DTE, 1 DTE, and 2 DTE can be. So it is, from what I've heard and researched, it's best to get in on 0 DTE options within the first hour and a half of the trading day. And for the bull put spread, the 40-40 and the 40-45, I placed the order right around here, around 4,073, and was trading at about a 40-cent credit. And I set my limit at an 80-cent credit, and it filled on this candle, I believe, around 8:15. And then I entered another limit order for a net debit of 5 cents to get out. So I captured 85 cents. It looks like my other vertical SPX option just filled. So I was in the trade for maybe 30 minutes, and I made a quick $120 off of a single contract spread. So if I change directions and trade SPX exclusively, I'll probably trade between 3 to 5% of the account per trade, as my risk will be based on a single index, namely the S&P 500 index. So, and that's something I will play with. If 5% is too much, we can scale it back to around 3%. But I'm pretty happy so far with the results I'm getting with a 1% of my net liquidation buying power rule. I've been, in the last week, I'm up 3,200. So it's working pretty well, I would say. So let's see. We've still got a couple hours until the close, and it is channeling sideways between the mean and the -1 LRC today. So what if, and I've already traded both sides, the puts and the calls today. Let's see. So this one had the 4095 has a 90% expiring out of the money. And the 4100, 25-cent credit. Yeah. So as the day progresses, the theta expands and reduces the value of the option. So that's why it's a good idea, to put on the trade early in the trading day, especially if you're doing 0 DTE trade. Now, because we don't have that much time left in the day, what if we look at a 1 DTE? So let's switch back to the 1-year daily on SPX. So, channeling sideways for the past year, slightly to the upside. And with the MACD crossing and stochastic crossed heading lower, I would say we're going to resume bouncing between the +1 and the -1 standard deviation. So Let's focus on writing bear call spreads, especially if we're holding overnight. And then say if the price was right around here from March 10th, 9th, March 13th rather, you could have written bull put spreads and just played the trend of bouncing on the turquoise LRC. So let's switch back to a 5-day, 5-minute. Zoom into the last 3 days. What could we get for a 4140? Now, when writing vertical spreads, I prefer that my short strike be above the +2 LRC or below the -2 LRC. So let's see what the 4140, 4145 spread looks like. It's got a delta of 3. Not going to have any money in it. Yeah, so let's see. So risk 445 to make 55. The 4115 has a 12 delta with an 88.4% prob OTM. So because we're also the theta on the short call is -2. So what if, let's spend 2,000. So yeah, we'll do 2%, right? So previously I did 1% on these spreads and I was getting 3,200 in under a week. So if I double how much I'm spending, this theoretically should go up to 6,400, assuming my trades are profitable. So 4115, look at the chart. That's up here. Yeah, I'd say that's relatively safe. I mean, not guaranteed by any stretch, but 90% prob OTM, I'll take it. And risk 1780, 10% would be $178. We're taking in a credit of 220, so we're above the 10%. So getting 10% return in 24 hours. I would say that's pretty good with a 90% probability of success. That's a 12.35% return on capital. So we'll send that off. Go back. And let's see. I'm guessing that the price may come back and double bottom around 40.65. It may even go down to the 40.40 price level. So what if we look at a bull put spread? We'll try to keep it around a 10 delta. See if we can get a 10% or greater ROC. So, no, not quite 10%. No. So, try a 430, 425. Okay, so let me try this. You can always increase your credit to get what you'd like. Now, obviously, there's no guarantee you'll get a fill, but if I can get my 10% with a high enough risk to reward, then I don't want to take the trade anyway. So 40-30 on my short put is a 13 delta with an 86.5 prob OTM. Let's go back. Look at the chart. Where's the 40-30? It's under this LRC. Yeah, we'll just do a day order. If it doesn't fill today, then tomorrow morning near the open, we can look at putting on another bull put spread. If the SPX sells off in the morning. So, let's see. Okay, so we've got 2 open hours on SPX. Basically, one of them just filled. We're legging into an iron condor. So an iron contour is basically a bear call spread and a bull put spread together on the same underlier and the same expiration month, or same expiration. So I'm excited about trading SPX because the rate of return we've been getting, and it's less work, right? So if you can make more money with less work and the same probability of success, then why not? Kind of makes sense to me. Put a comment below if you would rather me focus on random underliers or trading like SPX, SPY, QQQ. I'm curious what you're interested in. And if I'll go with what the viewers want, obviously. I'm making this content for you. And if you'd rather me run scans and place trades on random underliers, along with doing SPX 0 and 1 DTE trades, then yeah, we can just keep doing as is. It's just more work for me. But if that's what you want, I'll do it. Okay, so just saving a new watch list. And you can pause the video to set up your own scan. So it's scan, stock hacker, and then here are the criteria I use. But you're more than welcome to play around with whatever criteria interests you the most when locating an underlier to write spreads on. I've just found that this search criteria works pretty well for me. Okay, AUPH. I know I've traded this year. Let's see, it was like a 13 or a 14. So 13's up here. Yeah, I feel all right. Now, keep in mind, I'm now looking at the June 16 with 51 days till expiration. Feels like the tortoise and the hare. The tortoise being the 45 DTE spread trades, and the hare being the 0 DTE or the 1 DTE. You get obviously a much quicker turnover on your capital on the shorter term trades and potentially less risk depending on how volatile the trading day is. Okay, so excuse me, got a bit of a cold. So 47% ROC. That's pretty good. Okay, so about 8 contracts. Okay, risk 1180 to make 560. Okay, moving on. Okay, APLS. I don't like the uptrend, but I do like how it touched the +2 LRC and then had a bearish candle, then gap lower, along with MACD and stochastic. Let's see what the 90. Oh, we already have this at the 100. So, well, at least we know it's going well. If you would like, I don't necessarily recommend it, but you could do the 90, 95. It's a really good credit. So 1A divided by 320, 56%. Now, obviously, we're trading lower probability of success for a higher credit. So the 90 has a 65% probo TM, 46 delta. But looking at the chart, I would say the odds are strongly in our favor. To give you a little more room, you could do the 95 and the 100, right? So now the credit's not going to be as nice. So 130 divided by 370, still 35%. That sounds better. I mean, a lower ROC, but higher risk. You're gaining roughly 7 or 8% higher probability of success. The 95's up here-ish. Yeah, so I don't normally do this, but why don't we do 3 contracts, risk 1185 to make 315. The trade setup is just too good to pass up. So, yeah, we just basically doubled our requirement on AUPH. So come over here. Our buying power effect was 1741. We like to keep it around 1,000. So, but I'm pretty confident that trade will go well. And sometimes I'll break that rule of only having one bear call or bull put spread on the same underlier if there's not many trade opportunities out there. Like we've gone through 20 symbols and only placed one trade. So what if the 40? That's good credit, but what if we do the 45.50? So the 45 has an 88 Bravo TM, and the 45's up here. With the stochastic crossing like that, heading up, we're probably going to get close to touching the 40. So what if we experiment, do like a 90-cent credit, see where, so 329 risk to make 90, it's close to 30%. Let's do 3 contracts. So let's see where the price, okay. So let's drop the ARWR. Here we go. So instead of 90-cent credit, let's do an 80-cent credit. Maybe that's more like it. Actually, sorry. Let's do a 75-cent credit. Okay. So if it comes up and touches the LRC, we should be able to get our credit. So that's another way you can put your order on autopilot instead of adding it to your watch list, your almost ready watch list, so that if you're not watching it and the price comes up and touches a certain price level, you'll get into your spread. So that's another option. Okay, we're already in this one. I don't like the uptrend or where the stochastic is. Okay. Actually, have an open order on ALGN. We'll just cancel this order. Let's see. If we do like the 375. Okay, why don't we do the 30 delta and the 400. So a 390, 400 bear call spread. Risk 715 to make 285. 39.8 ROC. Okay, 39 days up here. Just not very liquid. Now it's saying the mid's 45. I'm not going to chase it. Okay, it filled. Okay. LGN, that was the one. Looks like I modified the wrong one, but that's alright. We'll adjust this one. So I just adjusted it to the midpoint between the bid and ask. There we go. Just got to fill. CRDW or CRWD. Downward trend. Didn't close above the +1 LRC. So if we do like a 140, 145. Let's see, 150, 155. So 67 divided by 430, 15.4%. Let's look where the short strike is. 150 up here. Yeah, it's not an ideal entry, but it should be good enough. And if you think the chart's telling you it might rally in the next few days, you can always increase your limit price. So you could bump this up to like an 80-cent credit and see where the price would need to be. Which obviously, if you bump up the credit you receive, then you're also increasing your ROC or return on capital percentage. That might be a good strategy if there's a solid looking trade entry, but you're still a little early. Meaning the setup you think will happen in the next couple of days. but you don't want to add it to a watch list and forget about it. So that's definitely something you can experiment with. Okay, so we're now down to the IV46. So these options won't be as juicy. So let's go back to SPX, looking at the 5-day, 5-minute. So it's traded below our limit price. Or is that my exit? No, that's an open sell order. So one thing you can do is once it fills, go in and put in your closing order. So right here we took in, or we received $2.95 and we paid out $2.40. So we took in a credit of 55 cents. I haven't been adhering to the 50% credit. I've been doing either a 5 cent or 10 cent order. So because we took in 55 cents, let's close it out for a nickel. And you could do GTC because it expires tomorrow. If you do a day order, it will expire at the close today, and you'll have to re-enter your order tomorrow. Okay, so now the bull put spread is on autopilot. It will either expire worthless. Actually, no, it won't expire worthless because of the open order we have, or we'll hit our max loss. So with 0 DTE or 1 or 2 or 3 DTE, it requires more management and for you to keep a close eye on it. So it's faster turnover, but you have to babysit it much more than the 45 days till expiration spread trades. So you have to ask yourself, do you want to babysit the trade more, or do you only want to manage it occasionally? In which case, if you only want to manage occasionally, the 45 DTE strategy may make more sense. But if you like a more hands-on approach and you can watch it throughout the trading day, like a 0, 1, or 2 DTE might make more sense for you because you can turn over your capital more frequently. But alternatively, you could lose your money more quickly. And if the trade goes against you, then you don't have the time cushion like you do with the longer duration spread trades. But as predicted, we are double bottoming, or getting close to the previous bottom at $40.61. So now would have been a really good time to enter a bull put spread, which we entered the bull put spread earlier in the video, and it just hit the limit not too long ago. So yeah, So I'll go ahead and end the video today. I just wanted to quickly go over our profit loss year to date. Down here in the bottom right corner is showing 13,814.50. Net lick 113,000. Cash's sweep 120,365. This is day 21 of trading. So what is that? 3 weeks of trading 5 days a week. Pretty good to get 13%. Trading high probability defined risk strategies. If you continue at that rate, that will be over 140% return on 140% return for a 12-month period if you can keep it up. So we'll see. I plan on doing one video every day for a year to show you what is possible trading high probability spread trades. So please like, share, and subscribe, and join me on this trading journey as I show you step-by-step way in which you could potentially double your account size in a year trading high probability option trades. Thanks again. Have a wonderful day and happy trading.